Good day, Gr12. My name is Mr. Nyaile from Grassland Secondary School. I'm the departmental head for Economics and Management Science. Today we'll be dealing with the topic of cash flow, which is one of the topics in paper 1. So before we can start, I would like us to highlight the most important things as far as cash flow is concerned. The first thing that I want us to look at is the financial statement. Cash flow is one of the financial statements that must be able to be prepared by a company. And in this statement, we are only going to concentrate on the cash or the movement of cash in the company. So we need to know how much money was spent by the company and how much money was received by the company. So the first thing that we need to look at is the purpose of the cash flow, why a company has to be able to prepare the cash flow. And then the second thing is the components of the cash flow statement. And then lastly, we will look at the format of the cash flow statement. Cash flow statement, which will be the format. Now, in the purpose of cash flow, we need to understand that the cash flow is used to control the movement of cash. It means we are going to deal with the inflows of cash as well as the outflow of cash. We want to know how much money was received by the business and how much money was spent by the business. Now, the amount that represents the outflow, when we go to the format of the balance sheet, with inflow of cash, we are simply saying this is the amount without the bracket. This is going to be the amount without the bracket. And then when we deal with the outflow of cash, we are simply saying this is the amount inside the bracket, because this means the money has went out of the business, while the inflow of cash means the money has came into the business or has been received by the business. So the purpose of preparing the cash flow is to determine the inflows and the outflows of cash. How much money was received by the business and how much money was spent by the business. Now, the components of cash flow, they are divided into 4. The first one is cash flow from operating activities. Cash flow from operating activities. So this means now is the money that we have spent as the company with regard to the dividend that has been paid by the company, as well as, let me just show you on this one. This is going to represent the amount of money that we have received as far as cash is concerned, which is the cash profit, the amount of money that is going to be paid on interest paid, and the amount of money that is going to be paid on dividends paid, and the amount of money that must be paid to SARS in the form of income tax paid. So all these 4 items, they fall under the cash flow from operating activities. Then the next component of cash flow, it is going to be represented by cash flow from investing activities. This refers to the money that we have to spend on the non-current asset, as we have just mentioned, in the investment, or we are talking about the non-current asset. The non-current asset would be the land and buildings, will be the vehicle, will also be the equipment as well. So we need to know how much money was spent on those investment activities or investing activities. So we need to know how much money was spent in terms of the purchases of fixed asset, and then we need to know how much money was received for selling the asset, and then we also need to know how much money was also received in the form of investment, in the case where the business has invested money in the form of fixed deposit. So we need to understand that as well. And then the other component of the cash flow, would be, the other components of cash flow will now be cash flow from financing activities. So we need to be able to know how much money has been spent also on the financing activities. In the case of financing, we are simply saying how do we have money as the company? How is the company financed? Is our company having money from the share capital when we sell the shares to the public? Or how much money has been spent when we have to be able to repurchase the shares again from the public? And then lastly, it will be how much money have we received in the case of loan if we don't have our own capital in terms of starting money. So that is cash flow from financing activities. And then the last component will be cash plus cash in change. Change equity, meaning this one will be now net change in cash and cash equivalent, which is going to represent our own bank balance at the beginning of the year, or the cash and cash equivalent at the beginning of the year, how much we had at the beginning of the year, as well as balance at end of cash and cash equivalent. How much money do we have at the beginning of the year, and how much money do we have at the end of the year? Then the difference between what we had at the beginning of the year and what we had at the end of the year, it will give us the net change, which is actually what happened during the year. Did we receive more money during the year, or did we spend more money as far as the company and the cash flow is concerned? Now the last part that we need to look at is the format of the cash flow. That is going to be our last part. Now on the screen we can be able to see, even though my paper is not user friendly, but in the screen I will try to explain. In the first part we have cash flow from operating activities. All the information has been inserted for you. This is what you need to know. This is what you need to be able to know as well, as far as the format is concerned. We have 4 items that must be indicated under the cash flow statement. The first one is cash generated from operation. This represents the profit or the cash profit that we have to calculate. Remember, in the income statement, we only calculate the profit that we have received as the company, and some of the incomes there, all the expenses are not paid yet, and some are not, the incomes are not received yet. So basically that does not represent the actual cash that we have made. So by doing cash generated from operation, we are actually trying to calculate the cash profit that we can be able to generate from the profit that we have made, as well as the cash that has been spent or received from the working capital of the company. And then we also have to indicate the interest paid that we have paid to the loan, or maybe the interest that we have paid on overdraft. So it must also be indicated. Then the dividends paid, remember the shareholders must be able to get their dividends back. So this means we need to be able to know how much money was paid to them. We have 2 types of interim, remember, dividend that we have, which is interim and the final. So the interim is paid during the year, so it must also be part of this. And then the final dividend will only be paid in the next financial year. So the one that we open with must also be paid this year. So this is the amount that we need to indicate how much was paid. And then the income tax, because we are running a company, it means from the profit that we make, we should be able to pay tax. So we need to calculate how much tax is going to be paid, as we know that the company is expected to pay 2 provincial income tax. So we need to calculate how much was paid for this year. Then the second component, this one is the first component. Then the second component is the cash flow from investing activities. In the cash flow investing activities, we need to indicate how many assets did we purchase and at what cost, how much did we spend as far as the cost is concerned. Secondly, I will also include it on the format, because this is what we're supposed to do. We need to include the disposal. By disposal, we are simply saying how much did we receive from the asset that has been sold by the company, which must also be indicated here. It could be the vehicle, it could be the equipment, it could be the land and building. As long as the asset has been sold or disposed, we can be able to indicate the amount of money. Then lastly, we have change in investment. Change in investment means the money that has been deposited or deposited to the bank in the form of investment, where we keep money for a certain period of time. So we need to know how much was collected if there's an investment that has matured this year, or how much has been invested this year by the business as far as investment is concerned. Now, the third component is cash flow from financing activities. In the financing activities, we need to determine how the company is financed. We can be able to have money by share issue, by issuing of shares. We can be able to spend money by repurchasing of shares, because the company can be able to buy back the shares. So when we repurchase the shares, it means we are spending money. Therefore, we need to know how much money was spent on the repurchasing of shares. And then lastly, we have change in non-current liability. We can refer to it as a loan. So we need to know if this year we did obtain a new loan from the bank, or we actually made a payment from the loan. So this means the amount of money that has been paid towards a loan, or the amount of loan that has been received from the bank in this particular year. Then the last part is net change in cash and cash equivalent. In this one now we need to understand what we had at the beginning of the year and what we do have now at the end of the year. What balance did we have at the beginning of the year? Did we have a positive balance or a negative balance? If a negative balance was there, then we need to indicate it inside the bracket. If the positive balance is there, then it must be outside the bracket. So now, the same applies to the balance at the end. If the balance is negative, then it will be inside the bracket. But if the balance is positive, then it will be outside the bracket. If it's negative, remember it will be the bank overdraft. Hence, it's supposed to be shown inside the bracket. So now, whatever we had at the beginning, up to what we are going to have at the end, will be the net change. So meaning if we have started with 10,000 and now at the end we have 30, this means now the change in net change cash equivalent is going to be 20,000. Meaning the change is what we got during the year or what we have spent during the year. The difference between what happened at the beginning of the year and at the end of the year. So this is the format that you must be able to know, and this is the format that you must be able to understand. Now that we understand the format, and now that we understand all the components of cash flow, and also the information that must be included in each and every component, I think we are ready now to do the activity, which is going to be based on the cash flow. Now this is going to be our answer sheet that we are going to use, and then this is going to be the question that we'll be dealing with. Now through this question, it's question 2, but our main focus on this question will only be on 2.2.2, which is going to be complete the cash flow statement by inserting only the details and the figures indicated by a question mark. Remember, on our answer book, we were supposed to insert only the one that are indicated by question mark, but I am going to do the rest of the other question except the cash generated from operations. We are going to calculate the interest paid, we are going to calculate the dividends paid, and we are also going to calculate income tax paid. Remember, in this question only income tax was asked, but I'm going to help you to calculate the interest paid, dividends paid, as well as income tax. In the cash flow from investing activities, only purchases and the disposal were asked, but we are still going to do the change in investment as well, so that you can know how it's supposed to be calculated if it was asked in the question. Also, in the cash flow from financing activities, only the share issue was asked, the repurchasing of shares was also asked, but we'll also do change in non-current liability, which also refers to as a loan. We can be able to calculate the change so that we can know whether we have paid a loan or we have obtained a loan as well. Now, on the last component, which is net change in cash and cash equivalent, we were expected to calculate balance at the beginning, balance at the end, as well as the net change in cash and cash equivalent. So we are all going to do all those questions because I want you to understand the whole part of the cash flow. Now let's start. Let's go back to the question and see what is expected on us. As I said, that we will be able to calculate the interest paid. The first thing that you should always remember, when we calculate the interest paid, we need the income statement, because in the income statement, that's where they will be able to show us the interest that was paid as in the name of interest expense. Now, the interest expense comprises of two things. The first one is interest on loan that you must be able to know. Then the second one will be the interest on overdraft. So if in the question they did not give you the interest expense, they will differentiate or give you the two. And then all you have to know is to add them together, and then they will automatically give you the interest paid. Now let us go to information A, because that's where we are going to get the interest expense, because we are given the income statement, as I've said earlier, that you will only get it on the income statement. On information A, they say, information from the income statement for the financial year ended 31st August 2017. Now the interest expense is 86,100. As far as the information is concerned, they don't mention anything on interest on loan. They don't mention anything on interest on overdraft. Even if we can go to the next page, they still don't mention anything on the interest on overdraft. So this simply means the interest that we see there on the income statement will automatically represent our interest that is supposed to be paid, which is going to be 86,100. Because it is paid, this means it represents outflow. And then earlier on my information, I said to you the outflows must always be indicated inside the bracket. So this is how we are going to indicate interest paid. It must be the amount and it must be inside the bracket. Why? Because with the cash flow statement, we are determining or testing the inflows and the outflow of cash. We want to know how much money went out and how much money came into the business. So this means this one we have paid, so it simply means that is an outflow. Outflow inside the bracket. Then the next question, we need to calculate the dividends paid. In the dividends paid, we have two formulas that we can be able to apply. The first formula will be the interim dividend plus the shareholders for dividends at the beginning of the year. That is how we can be able to get the dividends paid. Or we can say the total dividends plus shareholders for dividends at the beginning of the year minus shareholders for dividends at the end of the year. Why do we subtract the shareholders for dividends at the end of the year? Because this is the dividend that will be paid in the next financial year. So they have to be subtracted. So they cannot be paid this year. Only the interim and the one that we owed from last year will be paid this year. Hence, we are only taking interim with the first formula plus the shareholders for dividends at the beginning of the year. Whatever we had at the beginning of the year as shareholders for dividends is what we owed from last year. So it must be paid this year. Hence, we need to add them together. Now, in the total dividends, remember we have interim and the final dividend for the current financial year. Hence, it's supposed to be subtracted. Now, let us go to our information and see which formula can we apply. Is it the first one or the second one? On information C, we have an interim dividend of 12 cents per share that was paid on the 1st of February 2017. And then we also have the final dividend that was declared on 30 August 2017, which was the end of the year. Now we need to understand when did we pay, or when is the beginning of the year. The 1st of September is going to represent the beginning of the year. And then during May, we did have additional shares that was sold to the public. Now we need to understand what comes first. Is February 1st or is May 1st? As we can realize that February will come before May. Therefore, if we have to pay interim dividend, we need to pay them on 900,000 shares, because that was before we can issue additional shares. Remember, we pay dividends based on the number of shares issued. So at the date of February, only 900,000 shares were issued at the date. So meaning the interim will only be paid on 900,000 shares. So it will be 900,000 multiplied by the number of cents, which is going to be 12 over 100. Remember, our cents must be able to earn up to 100 cents. Therefore, let's go to the calculator and calculate. We are going to say 900,000 multiplied by 12 divided by 100. Then interim will be 108,000. This means now we'll have to be able to apply the first formula, where we would say on the answer sheet 108,000 plus. Now we need to go and add what? The final dividend. We need to go and add the final dividend. Now we will go to the additional information, which is B. On the additional information, we have shareholders for dividends. The shareholders for dividends at the beginning of the year was 120,000. At the end of the year was 168,000. Remember what the formula said? The formula said we should only take the balance at the end. We should only take the balance at the end. So meaning we are going to say 108 plus the balance at the end, which is 120,000. Then the dividends that is supposed to be paid, now there will be 108 plus 120,000. Then the dividends will be 228,000. Remember, this is the amount that we have paid. It must be inside the bracket, which is going to be, let me write it here and see if it's going to be clear, which is 22,800. It's still clear, we can apply it there as well. And then this will go here, 81,100 as well. So this means now our amounts are clear. Remember, when you calculate dividends paid, we have two formulas. The first one is interim plus shareholders for dividends at the beginning of the year. And the second one can be the total dividends plus the shareholders for dividends at the beginning of the year minus the shareholders for dividends at the end of the year. So we are unable to apply the second formula only for one reason, because we don't have total dividends as far as the information is concerned. Now, the next calculation will be the income tax. First of all, before you can calculate the income tax, you need to be able to know what is the income tax for the current financial year. And where are you going to get that information? On the income statement. So let us go to information A and check if there is income tax for the year. There it is, which is 187,770. So we'll start with it, 187,770. Now remember, who receives income tax, or who the business must pay the income tax to? It must be able to pay it to SARS. Now let us go to the information and see. SARS in the business can appear in both ways. SARS can be an asset to the business, or SARS can be a liability to the business. SARS will only be an asset to the business if the SARS has a debit balance, and SARS will be a liability to the business if the balance is on the credit side. Why are we saying that? Because remember, SARS by default is a liability account. This is the money that we have to pay towards SARS. So sometimes we can pay more than what is expected, therefore SARS is owing us, or we can pay less than what is expected, so the difference will be owed to SARS. So the SARS account will either be receivable or payable to the business or to SARS. Now let us go and see where are the balances. Remember, if SARS has a debit balance, this means it's a positive amount or it must be, it's a positive amount that's supposed to come to the business. And then if SARS has a credit balance, this means this is a negative amount that is still owed to SARS. Now let us go to the information and see where is SARS. When we look at our information, SARS is on the debit side, the balance at the beginning, but now the balance at the end is on credit side. Now I'm going to show you this. If, remember the T account of SARS, it goes this way. On the credit side, we have the positive sign. On the debit side, we have the negative sign. This simply means this is where now, where SARS is receivable, and then this is where now SARS is payable. So we need to understand the balances, the differences that we are saying. Now, before you can know whether you're going to add or subtract, you need to know where the balance of SARS is. So as we can see, the balance of SARS, I just want to bring it closer so that you can be able to see when we insert the values. The balance of SARS at the beginning of the year is on the debit side. From that T account that I've just shown you, this means we have to go and subtract because that balance is on the negative side. Therefore, we would say minus, how much is the amount? 2,400. Now let us go and see the balance at the end. The balance at the end is here on the credit side. Remember, the balance is on the credit side, but we are not interested on the balance brought down. We are more interested on the balance carried down. If the balance brought down is on the credit side, therefore the balance carried down will be on the debit side or on the opposite side. So the balance was on the positive side, so the carrying down will be now on the opposite side. Therefore, that money should also be minused as well. So we are going to say minus again the amount that is the balance at the end, which is 11,800. Now our total is going to be, which must be calculated now. Our total will now be 18,770 minus 2,400 minus 11,800. It means the amount of SARS that is supposed to be paid is going to be 173,570, because it's the amount that must be paid. It must be inside the bracket, because remember, what did I said to you? I said if the amount is paid, this represents the outflow, and this outflow must be inside the bracket. So this is how we calculate the interest paid, this is how we calculate dividends paid, and this is how we calculate income tax paid. I hope we are still following. Remember, on the income tax, the most important thing is to start with the income tax. Once you have your income tax, you go and check where SARS is. If the balance is on the debit side, this means now the money is owed, so therefore we are going to subtract. And then if the balance is on the credit side as well, this also means now we are owing money to SARS, but we are interested in the carried down, not the balance at the end. So therefore, we are also going to subtract the amount, because now the brought down will be on the credit, on the positive sign. Therefore, we need to take it to the credit side. So this is the first component of the cash flow where you are able to calculate. Now, on the second part of the cash flow, we need to calculate the cash flow from investing activities. In this part, first of all, we need to calculate the purchases of fixed asset. We have two ways to calculate the purchases of fixed asset. The first way will be the formula. The formula goes like this. It will be the fixed asset at the end of the year, carrying value of fixed asset at the end of the year, plus depreciation for the year, plus disposal, and then minus balance at the beginning of the year. That is the formula that we can be able to apply whenever we calculate purchases of fixed asset. But if the note is given, we need to go to the movement. Under the movement, we'll go to additions at cost, and then in the addition of cost, we'll have the amount for land and buildings, we'll have the amount for vehicle, we'll have the amount for equipment. So we'll add all the amount together, and then after adding all the amount together, the final amount that we get there will represent the purchases of fixed asset. Now let us go to the information and see which one is given. If the balance sheet is given, we need to apply the formula. If the note is given, we need to go to the movement under the additions at cost. Now let us go to the information and see which one is given. Based on our information B, we are given the balance sheet. Therefore, we need to apply the formula. Then the formula that we are going to apply will now be the formula that I've just mentioned to you now, to say we are going to say balance at the end of fixed asset, which is 6,177,000, plus the depreciation, which is going to be 320,000, plus the disposal. The disposal is on the next information, which is information D, where bullet number 1, when they say old equipment was sold for cash at the carrying value of 324,000, meaning this is the amount of money that we're going to receive for selling the asset. It must also be added, 324,000. Then minus balance at the beginning. Then the balance at the beginning will be 4975 minus 4975,000. It means the amount that must be paid on the purchases of fixed asset will be 1,846,000. Remember, this is the purchases. It means we have paid. This amount represents the outflow of cash. Let us continue again. We said we need to apply the formula. The formula says balance at the beginning of the fixed asset plus the depreciation plus the disposal or the asset sold, which is 324, and then minus balance at the beginning, which is 4,975,000. Then we'll end up having 1,846,000 as the purchases of fixed asset. Then the next item is the disposal. Remember the disposal, I explained it to you that this is the amount of money that we have received by selling an asset. When we go back to the information D, bullet 1, we sold an old equipment with the value of 324, meaning this amount must be inserted here, 324,000. This is going to be outside the bracket for one reason. This is an inflow of cash. It's the money that comes into the business after selling an asset. Now, the last part on the investing is the change in investment. Remember, I said investment represents the money that has been invested in the bank. So meaning when we take money to the bank, that is an outflow of cash. This means when the investment increases, this simply means we took money from the business to the bank. That will be the outflow. But when the investment decreases, this means that the investment has matured and the business did receive the amount of money from the bank. So when the investment decreases, this will represent the inflow of cash because it moves from the bank to the business. But when the investment increases, then it will be the outflow of cash because now we took money from the business to the bank to increase the investment. Now let us go to our information and check if the investment has increased or decreased. So investment can be called a fixed deposit. It can be called a financial asset as well. So don't get confused if you see fixed deposit Don't get confused if you see financial asset. Don't get confused if you see investment. They are all mean the same thing. So meaning, let us go to the information and check which one do we have. When we look at our information, the one that we have is fixed deposit. At the beginning of the year, we had 300,000 in the bank. But now, at the end of the year, we have 220,000 in the bank. What does that mean? It means we went to the bank and took some of our investment with the value of how much? 80,000. So how did we arrive to that value? We are going to say in the bracket 300,000 minus 220,000. Meaning how much was collected from the bank? We are going to say 300,000 minus, which is balance at the beginning, and then minus balance at the end, minus 220,000. Meaning 80,000 was collected from the bank. So this means this 80,000 will represent the inflow, because that is the money that comes from the bank to the business. So that is the money that has been received by the business. This means the investment has matured, but only with 80,000. So that is going to represent our inflow. And then now we need to go to the other part of the cash flow, which is financing activities. First of all, we must deal with the share issue. We need to know how much money was received for selling shares. Now, let us go to the information. When we go to the information, good people, we must remember shares can be issued at the beginning of the year, shares can be issued during the year, shares can be issued at the end of the year. The amount of money that we are interested in here is those shares that were issued during the year. Those additional shares, those new shares that were issued, we are looking for them. So when we go to information C, we have 1.2 million, which represent our authorized shares. They are not the issued shares. On bullet number 2, we have 900,000 shares that were issued on the 1st of December. Remember, this is beginning of the year, so we are also not interested in those shares. Then secondly, we have the number of shares that were issued during May. 150,000 were issued at 6.30 during May, represent during the year. This is the actual shares that we are looking for, the shares that were issued during the year. Now let us go back to our answer sheet. How many shares were issued? 150,000 shares were issued at the beginning of the year. Multiply by at which price did we issue those shares? Those shares were issued at 6 rand 30 cents. Therefore, we are going to multiply it by 6 rand 30. Now we need to do the calculation to arrive to our answer. We are going to say 150,000 multiplied by 6 rand 30. This means we have received 945,000. This is going to be the inflow, because this is the money that has been received from the public by buying shares. It means the business has received money for selling shares. So we are going to say 150,000 shares multiplied by 6 rand 30, which is the price per share. Then the amount of money that will be received will be 945,000. So this represents the amount of money that we have received for selling shares. Therefore, it will be the inflow of cash. Now, the repurchase of shares is the next calculation. When we go to the next bullet, it says 70,000 ordinary shares were repurchased from the shareholder on 30 August. It means we did repurchase 70,000 shares, and a check for 437,500 was issued for these shares. These shareholders qualify for a final dividends. Now let us see what is happening here. We repurchased 70,000 shares. The amount that was paid is 437,500 for those shares. It means the company spent 437,500 37,500 to repurchase how many shares? 70,000 shares. So they did not give us the price per share, but at least, or the repurchasing price, but at least they managed to give us the total amount that was paid. So we can just take it as it is. But remember, we are repurchasing, therefore it means we are spending money, therefore this amount must be indicated inside the bracket to show the outflow of cash. And then lastly, we need to calculate the change in non-current liability, which also refers to as a loan. In the case of a loan, we need to know whether we have paid a loan or we did receive a loan in the current financial year. Now, let us go back again to the balance sheet to go and check where is the loan. As we can see on information B, we have the non-current liability from Dolphin Bank. The amount that we owed to them at the beginning of the year was 450,000. Now, at the end of the year, we are owing these people 985,000. What does that mean? There's an increase in loan. Increase in loan means what? Means we went to the bank, borrow another money. Now that money came in to the business. That is going to be what? The inflow of cash. Because money came into the business. Even though we know that that money must still be paid, it doesn't belong to us as the business. It is not actually our own money. But the fact that it went from the bank to us, it will represent the inflow of cash. Now, how are we going to go about that one? We will go again on the answer book. In the bracket, we'll have to show what was the balance of the bank at the end, which is 985,000. And we are going to subtract the balance at the beginning, which is 450,000. Now we need to calculate what is the change in loan. The balance that we had is 985 at the end of the year. We need to subtract 450,000, which is balance at the beginning of the year. 985 minus 450,000. Then our balance is going to be, or the change is going to be 535,000. This is going to be the inflow of cash. Why? Because the loan has increased from 450 to 985. Why? Because we have received this amount of money from the bank. So remember, if the business received the money, this represents the inflow. If the business spent money, this represents the outflow. And how do you show your inflows and the outflows on your format on the face of the cash flow? This means you must be able to show the outflows inside the bracket, because this represents the money that has been spent. And then how do you show your inflows? The inflows must always be outside the bracket, because this represents the money that has been received by the business or by the company. I hope we are still following. And then the last part that we need to do on the cash flow is going to be the net change in cash and cash equivalent. What is important here, learners, we need to remember that we can take the cash and cash at the beginning and the cash and cash at the end. But the most important thing that we need to remember is to subtract the bank overdraft. Because if you have a bank overdraft, it simply means you don't have the money. You are actually owing money to the bank. So the balance should always be inside the bracket, because it also represents the outflow. Because once you deposit the money, it means the bank will automatically take their own money. So it means the negative balance means that is not our money. So now let us go back and check on our information B again to see if we do have cash and cash equivalent together with the bank overdraft. At the beginning of the year, we do have cash and cash equivalent of 2,500. At the same time, we have the bank overdraft of 65,100. So there is no way that we could say we have a positive balance, because the amount of money that we are owing to the bank is more than what we have in the bank. So now let us go back and calculate the correct balance that we are going to have in the cash and cash equivalent at the beginning of the year. Now, from our information at the beginning of the year, we are going to say the balance that we had at the beginning of the year of 2,500 of cash and cash equivalent minus the bank overdraft of 65,100. Then our balance will now be 2,500 minus 65,100. Then our balance at the beginning of the year will be 62,600. The negative one, the negative 62,600 at the beginning of the year, it means we don't have any positive balance, so we have a negative balance. It means we are owing bank 62,600. Now let us go at the end of the year and check what do we have. Now, at the end of the year, we do have cash and cash equivalent of 23,400 and 0 bank overdraft. So it means we don't have any bank overdraft. So we can still say balance at the end. We can still recalculate it by saying 23,400 minus 0. Then the balance will still be 23,400, the same balance, 23,400, because there is no effect. Bank overdraft is 0, therefore our balance will still be the same. Now that we have these two amounts, we need to calculate how much we had during the year. We had the negative balance at the beginning, but at the end of the year we are now having a positive balance. How did we arrive to the positive balance? That is the change that we had during the year. It means if we have the positive balance, this means we have more inflows. More money came into the business and we use that money to pay the overdraft. That is why we are left with this. So if we had the balance here, we could have set this amount minus this one, then the balance we're going to be 23,400. Because now we need to work backward. Whatever that was added is now supposed to be subtracted, and whatever that was subtracted must supposed to be added. Because we subtracted this amount to get this one. Now when we go up, we will say this amount plus this one, which is going to be 23,400 plus 62,600. 62,600. Then it will give us 86,000. 86,000. When you say 86,000 minus 62,600, your balance should still be 23,400. This means your cash flow statement is absolutely correct. So let us recap on what we have done today. I just said to you, the first thing that you need to know is the purpose of the cash flow. The purpose of the cash flow is to determine the inflows and the outflows of cash, how much money has been spent, how much money has been received by the company. Secondly, you need to know that cash flow is one of the financial statements that must be prepared by every company. Then secondly, we dealt with the components of the cash flow. They are divided into 4. The first one is cash flow from operating activities. The second one is cash flow from investing activities. And then the third one is cash flow from financing activities. And then the last component is cash, net change in cash and cash equivalent. Come on to my cash flow in net change, cash and cash equivalent. Then the other thing is that you must always remember what is the details or what forms part of the operating activities. The cash generated from operations which also referred to as a note of the cash flow that must be prepaid. So this represented the cash profit that we have received and the cash that has been spent or received on the working capital of the business. Then the interest paid that has been paid, the income tax that is supposed to be paid for the year, and the dividends, the amount of dividend that has been paid during the year. Under investing, we look at the purchases of fixed assets. Remember, we have the formula that we need to apply if we are given the balance sheet, but if we are given the fixed asset note, we go to additions at cost. And then the disposal represents the asset that has been sold. This will always be the inflow to the business because money comes into the business. Then we have the change in investment. If the investment increases, this means it's an outflow of cash because we went to the bank and have more investment. But if the investment decreases, this represents the the inflow of cash because now it means we went to the bank and took money from the investment. Cash flow from financing activities consists of share issue. This is the amount of money that we have received for selling shares because company can be able to have capital by through shares, or they can be able to have money by selling shares. Then secondly, we have the repurchase of shares. This is the amount of money that we have spent for those shares that we bought back from the shareholders. So we need to be able to calculate how much money was spent. And then lastly, if we don't have our own enough money, we can be able to go and borrow money. If the loan increases, this simply means we went to the bank and borrow money, and this will represent the inflow of cash. But if the loan has decreased, this means we went to the bank and make a payment. So once we made a payment, then it will be the outflow of cash because now money goes out of the business. Then the last part will be the net change in cash and cash equivalent. The most important thing to remember when you take your both cash and cash equivalent at the beginning and cash and cash equivalent at the end is to subtract the bank overdraft. As we have just done it now on this activity, we only had bank overdraft at the beginning of the year, and then it was subtracted. Now our balance is 62,600. At the end of the year, we don't have any bank overdraft, so we subtracted 0. The reason why I subtract 0 is just a reminder to you to always subtract the bank overdraft. Even if it's not there, subtract 0 as a reminder. Then your balance will be 23,400. And how do we get net change? It will be the difference between what we had at the beginning of the year and what we had at the end of the year, or what actually happened during the year. Did we had inflow of cash or did we had the outflow of cash? So this brings us to the end of our lesson. I hope you did enjoy the lesson and then you did learn the most important things as far as the cash flow is concerned. I thank you.